The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the Tuesday edition, Tuesday, December the 4th. And my pleasure to be here on Tuesday, Wednesday, and Friday at 11 o'clock till noon. Of course, I will not be here Thursday and Friday because I'll be doing my live webinar, online webinar, on the ChapmanWave methodology. And I'm really looking forward to it. I've been preparing it because I believe that there'll be a lot of, well, let's call them freshmen in the course. Therefore, I'm able to go right from the very beginning to build up on the structure. I've got a chart right now. If you're looking at Tiger TV, you can see it. This is the volatility index. The volatility index, 120-minute chart, went from a low bar. This is what I teach. Going from a low bar, in this case, the volatility index on the 16th of October at 14.50 went to peak A. You identify the lowest left side, most obvious low bar. That's the easy way to do it. Merely count each successively higher peak. 1 penny above the previous high peak makes it a brand new leg up. It's a leg until it becomes a peak. In other words, that B that you're looking at right there, if you're looking at Tiger TV, it was a B. That's a B, leg B, leg B, leg B, and then peak B. Moment that 17.60 is taken out, it goes leg C, peak C. As soon as peak C is taken out by 1 penny, D. D is what you expect to get to. At D, you can see either a consolidation, a breakout to the upside, or whatever, but that's where you got to be careful. That's where, as the song goes, oh, we're going to sing the song, of course. You buy at the low and you sell at the high. The market goes up, the market goes down. Supposed to buy at the low and sell at the high. And then you go snap, snap. But you know what we tend to do? We buy at the high and we sell at the low. ChapmanWave is what you need. You buy with the Stoke and the old MACD. See, there's the stochastic. There's the MACD. You follow the price and wait for a peak. Higher highs is what you seek. The wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Remember, you don't get graded for singing. You just get graded for accuracy. And then, and this happens periodically. Look at this. If you consider, I'm going to go to the white chart. No, I'll go to the black chart. If you consider that methodology, then you've got to anticipate that occasionally, it depends on what we're looking at. The price can go to an E and an F in the ChapmanWave. Well, this is what the Dow did. So suddenly it goes to E and F. Right there, look. This is the Dow monthly chart, July of 2007. 14,021 is the high, pulls back. Then it goes to 14,198 in October of 2007, leg F, with a doji candle. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high, and you buy at the low. You remember the low, the exact low? That's the day of 6th of March, 2009. We bought that exact low on the diamonds at 66.50 or 65.60. I can't remember anymore. And we held it for a long time. We got a huge gain on that. So that's what you want to learn. How can you use the ChapmanWave? Very easy methodology, not always easy to implement after a certain point, but that peak A to B to C, that's really what you want to be in, and then you get to that D. So now, let's go through what we're looking at. And I really have to thank Steve. Wonderful interview he did with me. We had a show together. It was basically an interview, although we were doing the show together just an hour ago. You can go to that. That's archived, probably channel 10. And we were going through the different techniques that what we're looking at, and how the euro dollar, the EUR, was in leg D. That's where you've got to be somewhat cautious, but at the same time, what you look for are the different signs. And the 120-minute chart was making a peak D as the MACD was at a lower level, stochastic at a lower level. And it just says be very careful on the short term. But when you look at the other technical indicators that I use, like the stochastic and the MACD, which is at 89%, and the MACD is still very very strong. That says, yes, you can expect a pullback, but the magnet of those previous highs is there, and the support of 1.2 the euro dollar. So thank you, Steve. That was I really enjoyed it a lot, and it was for me very informative because I managed to give out a lot of information. So when I say a bell rings so loud it can make you deaf, that's when I look at the Dow. That was anyone who was listening to the shows back then, it was part of my subscription service, you know that I said if the 9-period exponential moving average, which the Dow held above all the way from the breakout right there, the breakout in June of 2005, never closed below the 9-period moving average. I said if it closes below that, for the December close, look, there it is. It just closed below. I said that's going to be very important in my work because I will get a sell signal to sell mode, and that's what happened. Then there's a candle. You see, I teach about candles that you might never have heard of before. Why? Because they're candles that I've developed as a ChapmanWave methodology candles. This is what's called a Roman candle. The principle being that if you get into a half of the wick, you've got to be careful because it's invariably going to touch and even break the low. So these are all the techniques we'll be discussing. Of course, we can't get to every single thing, even those 2 days. You know, I used to have 3-day seminars live. Monday and Tuesday was level 1, and on Wednesday would be level 2. I just found that I couldn't use my voice for days after that, which defeats the purpose. So,
you know what it was? It was the singing. I told you we don't get graded for singing. You just got to get the words right, and you've got to get the impact of what the song is all about. So, yeah. What can I say? The singing messed up the entire recording industry here. All right, so this is what you get. You get my CD introducing ChapmanWave methodology. You get, and I'll be going through this. So if you don't receive it overnight, we'll try to get to you as soon as we can. But if you don't get it, it's not a problem. I'm going to be going through every one of these things step by step. You'll be able to go through for 2 days. These 2 days. For 30 days, you'll be able to go through those 2 days and go through any section you want over and over and over. So I just wanted to go through that. And the Tiger dollars. It's just really important that we're able to keep everything in perspective. This is the holiday season. Treat yourself to an education. That's my request to you. Treat yourself. It doesn't have to even be my service, but go to TF and then check out what's there. Now, let's just go through the numbers. Very important that we go right now because this is what I want you to explain. As long as the stochastic, which is at 89%, and the MACD is holding well, I believe that should be good support for at least the Dow and the S&P. Even the Qs, and I'll go through that in a moment. So the Dow has made a leg C. It'll be a peak C if there's no new high today at 13,087.33, 1 penny above the high of yesterday. And you know what? I would prefer there's just a little bit of time taken here, a little bit of consolidation, and let's say I'm on the black charts. I need to go to the white charts. Okay. And I'll explain why. Let me just go back to this. I love to look at the different time frames. And if you look at the Dow on the daily chart, it says, yes, very nice rally. Not a great rally, although it's gone from the 14,471 level to the high yesterday of 13,087. So that's 13,008. That's a 700 point. It's good. But I would have preferred if this rally took us in leg C into the more into the candle, into probably the candle of the 7th, somewhere into the about the 13,120 level. To me, then that would have been, I wouldn't say more comfortable because I feel quite comfortable here. In my opening call, we have 4 long positions. 2 of them are doing absolutely fabulous. We just bought 2 yesterday and today. Both of them are up about, let's see, I can't tell exactly. One's up, they're up. Actually, both of them are up quite nicely. Both of them are up today when the market is a little bit shaky. But we had a short. I'm very upset about that. We had a short ASIO AutoZone. I did all the work. I did everything for that. I showed the chart. Even the 120-minute chart this morning. I said yesterday I showed the chart with a target of this diagonal line to the downside. What is a diagonal line? That is the pattern that I call the arch formation. And in the arch formation, you want to be able to know how you can get the left side, right side, price, time match, and that inside wedge that I call the ChapmanWave inside wedge. And that's exactly the technique that I use right here, that inside wedge. And it took us right to today at by 11:30. The price that I was looking at was the body of that candle, and 370 was my target. And where did it go? It opened at 373. And suddenly, there must have been some news event. It went to 384, and now it's trading at 366. So we took 2 points profit, but I did the whole thing correctly. Well, that's what happens when you have buy stuff. You've got to have the discipline. Do I care? Yes, I care. Does it mean that the technique was bad? No. The implementation was that I did not want to risk when a stock, like a fantastic stock for the last number of years, it comes out and starts. I didn't even hear the report. I didn't care about the report. It seemed to me.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow's down 3 at 12,961. S&P's down 3.5 at 14.05. And am I upset about ASIA AutoZone now being at 366 when we were short at 380? Took a 2-point profit before they pushed it higher, and now they back down to the lows of the day. No, am I upset? Am I upset? Do I sound upset? Yes, I'm upset. I won't waste any time. We'll talk about the market in a moment, but we're going to go straight to Mike in New York. Hi, Mike. How are you?
Good, Basil. You have to take a Valium. I'm a subscriber of yours. I am short AZO, so.
Are you still holding it?
Of course.
Of course, I know, yeah. But I have no choice. So with subscribers, I have to have these stops. I refuse to take more than a 3 or 5% loss maximum. I like to keep it to 1 to 2%. But I was determined that, in fact, I even thought that I would put in another short round about the 384 level, but then I said, wait a minute, if AutoZone reverses after being down so sharply, they could turn into one of those stocks that we've seen lately that are very sharply down in the morning, and by the afternoon could be very sharply higher. I did not want to take that risk. Congratulations, Mike. You're holding the baby, and I have to tell you, I've got a hat-trick top for this. If it has a decent rally at any point soon, it'll be back on my list, because I think that this has made a pretty significant high. I don't even know what the news is. I couldn't care about the news. The news says that the chart is going down, and that's all I'm caring about. You'd like to look at what?
Yeah, at Harley Davidson.
Now, Harley is the same kind of thing. Harley Davidson made a peak F-tops. Folks, remember the song that I was singing? We put that into into brackets, the singing, about the ChapmanWave. Well, Harley Davidson has the same sort of thing. Harley Davidson made a peak F-top at 75.87 back in November of 2006. That's what's called a right arm extension, where the technicals do not confirm the rally that's going on, and it goes after a previous peak that looked like that was the peak. It suddenly makes this extended move, but it's not verified by the technicals, and it makes the pattern that I call the Eiffel Tower, capital A pattern, straight up, straight down. It goes all the way from 75.87 to $7.99. That is a haircut. That is a real haircut. And then Harley Davidson goes to peak A, B, C, D, E, and then does exactly the same thing, the right arm extension to another peak F. The song goes, a bell rings so loud it can make you deaf. I was on air where I was discussing both that original top that I said could be a pretty much like a hat-trick top, and the most recent one. There was just one difference, that the MACD was pulling back, but it hadn't really given what I call a wide beta. That's between the fast-moving average, the red line, if you're looking at Tiger TV, and the green line. The green line needs to be way below to give that wide spread between the shorter term 9-period exponential moving average differential and the longer term, the 26. And at this particular point, it says to me that there could still be a little bit of internal power in Harley, because the weekly chart is also at 80% and the MACD is pretty good. But yes, this is what I call the conflict, the fight between two chart formations. There's a chart formation that takes in the cup, and there's a chart formation that looks like the arch formation. It was making the cup formation, and in fact, in a sense, you could say, yeah, it's kind of doing that. It's a little bit extended to the right. I do not like that when it takes too much time, because that says there's a pattern that I call in my CD introducing the ChapmanWave methodology. I call it the right shoulder failure. So the right shoulder failure, that's chapter 21. Let me scroll down to chapter 21. And basically what that says, right shoulder failure right there. That's where often it comes from a peak F, but it could come from anywhere. In this particular example of General Motors back in the day when General Motors was the original General Motors, trading in the 50s, it went to a peak F, pulled back, and tried to rally and failed at a peak A. And that is what normally a 40 to 60% rally from the slide from the top is the one that fails. So now let's go back to Harley and see if this is the same thing. Well, Harley made a most recent high of 54.32. It also had a round number, what I call a silent indicator, right in the middle there of May of 2012. Then it pulls back to the 54, I said. 54, and it pulls back to 41. Whoops, no, it pulls back to 37. So that's 17 points. So 8 points, let's call it 8 to 9 points would be the rally. So 8 to 9 points above 37.84 would give you 46, and it just went to 48.49. Let's talk about this particular pattern, the right shoulder failure. Be back right as soon as we finished with these very important commercials with Mike in New York looking at Harley Davidson trading at 46.16, up 16 cents. Basil Chapman, be right back. Dow's down 7.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Stay tuned after the show because you got Victor Jones with the Options Hour. Just a great show. Just really a fabulous show on options. Tremendous show. Oh, we're going to buy the options on AZO. I'm not going to talk about AZO. We're going to go straight to back to Mike, and we're looking at HOG. This is Harley Davidson. Harley Davidson trading up 19 cents. So I know that you're looking at this as a potential short, or are you short already?
No, I'm short a little bit, but on the monthly count, I'm getting a different count.
Uh-oh.
The bar of April of 2011 at 43.15. It's weird. It's 3.14 on.
I've got. Okay, because I got 43.14 opens at round number 40 in March of 2011.
And
the next high is 42.51.
Right, and then after that.
And then after that, I got 43.15, which is 43.15, which is 1 penny higher. Wow! Second time today, I've been caught out on this. Oh. The obligation in the ChapmanWave, it's your only obligation really, is to make absolutely sure that you go to each high and each low and you do not miss a count. And I did. So that's F. But you know what's interesting about that? That's F with only a plus sign because the MACD did not turn negative. And now I've got a potential G/A. Okay, that's the way I've got it. Oops, nope. G/B. All right. So that, yep, that's the way I've got it right now. So this is what I'm looking at. And one of the reasons why I love to look at Harley, I constantly for years now look at Harley as a potential short because I base it on discretionary income. Does anybody really need a Harley? No, you can get many different makes. It's a very expensive bike, beautiful bike, but there are choices. So if you're buying it, it's discretionary income. It's income that you say, I want a Harley. I'm going to make money. I'm going to make sure that I can pay for it. And they are very expensive. So I'm looking at this and I'm saying this together with another stock, which I featured this morning, which I'm going to talk about now, which is, if I can just find it here, RYCEY. I don't think anybody's ever talked about this. I'm talking about it right now. I've shown it to my subscribers. This is Rolls-Royce ADS, which of course is not British anymore. Just a fantastic uptrend, and that uptrend has remained, and it'll break if Rolls-Royce cracks 75.50. I'd say 76, and the high today is 73.56, 73.31. It opened at. That's the monthly chart. The weekly chart is in leg D, bumping up against resistance. The daily is in leg D. So there's a chance that we are potentially looking at some kind of a pullback. But when Rolls-Royce eventually gives a sell signal, my thinking is it'll be a sell signal for the international markets, the United States, just around the world. It could make the top because it made the bottom in March of 2009, a coincident indicator, but it did give the top back in July instead of October of 2007. It was a couple of months earlier, so I'm going to be watching this one closely. And Harley, in a sense, fits that because it's the money that says, you know what, at a certain point, I'm kind of done. I cannot do that anymore, and that's the real discretionary income of folks who love the bike. They love the idea of getting a Harley and riding it, even if it's just a Sunday drive, a rider, or if it's someone who's retired and going across the country, or it's just your regular bikers. So I'm watching this real closely. So this is what I'm going to recommend. I'm watching Harley real closely because my daily says that it's making some kind of a top here, a double top in the 48s, and the stochastic and MACD have turned down. If Harley takes out 44.60, closes below that in the daily chart, I'm probably going to have to say, 48, 49, 48, 49, that was a peak C1, C2 in the weekly. I'm going to be watching this really closely, because if Harley starts to pull back quite sharply, it's saying to me, be careful. You might be getting good signs in your intraday chart, your technicals in your Dow, the NYA, etc., but you better be careful, because prices can pull back and then technicals follow. So I'm watching this real closely, because Harley Davidson can make the arch formation, and that Roman candle low of 37.84, that's just sitting there. I believe at some point it will be tested. That's the 39.24 level of the 200-period moving average in the weekly, and the low bar of August, the week of the 3rd of August of this year. But in the meantime, I'm watching the monthly closely. Now, this is what I'm going to recommend, because you have a small position. I'm going to recommend that if you are interested in adding to your position, if Harley starts to take out 45.67, it's at 46.16, I would say a small position as a trade, and that trade says that your target would be the low bar, that wide, long-legged doji of 44.48 made on the 16th of November. If at any point in the next 3 to 5 trading sessions you see Harley take out yesterday's high of 47.40, that's going to be very positive, and then it will be going to leg D up in the weekly chart about 48.49. So those are my parameters. I would not say to you, get out of your position. What I would say to you is, you can add for a trade, but if it does start to take out 46.85, I would make my stop around about 47, 42 to 43 on the small position you've started, and just let it drift to the upside, and maybe we'll get back. You can get back in a little later. Those are the parameters. It's right on the cusp. It's saying to me, keep it in mind. It's not acting as well as it was in that huge leg up from July of last year into the high of 54.32 of May this year. So for 1 year, it had a great move. It's pulled back. It's on the simple moving average in the monthly chart. Bounced over the 9 EMA, but it looks like it's trying to tackle 45.20. That's the 9-period moving average in the monthly chart. But we're only 2 sessions into, not even 2 sessions into December. So those are the parameters. So I hope that helps you.
Yes, and I just wanted to say you work very well with Steve. I enjoyed that show.
Oh, thank you very much. Yeah, I enjoyed it. We had a lot of fun. Thank you very much.
So anyone who hasn't taken Basil's course should sign up. Well worth it. Okay.
I appreciate that. Thank you very much, Mike, and you're certainly a great student and a great example. Thank you. Mike in New York. Now, let's go, folks. This is what I wanted to look at here. I wanted to look at a couple of things. The reason why I've been wanting long positions, I even want to do, I don't think we're going to get it, I want you to buy the DDM 200% long, is for this very reason, that the stochastic is so powerful at 89%. The MACD is good, and I've got such a tight stop that if we had to get it and then the market bounced, we'd be in a real nice position. Why? Because I'm expecting at least leg D, which would be about 13,087.32, except for one little thing. If it breaks above that, then that ugly candle, the candle of the 7th of November, the high bar at 13,228, that becomes some kind of a target, you see. So I see the benefits here. I'm cognizant of the fact that we can certainly roll over, but you know what? My the VIX indicator has made leg D. Almost every time it makes leg D, you're real close to some kind of a pullback. And look, it went to a new recovery high at $17.16, and the Dow has had a very high level consolidation. It hasn't broken down yet. So far, this is very positive. It looks like the magnet of 13,103 in the Dow. This is the chart I show my subscribers every single day. Don't forget, if you take my course, you also get unbelievable bargains you're going to get. You'll also get a bargain off my opening call. So in the meantime, back at the ranch, let's just go back to what I wanted to do. I've written it down. I forgot to look down at my sheet. I always mean to look at the sheet with all the notes that I make all evening. I'm busy making notes here. Now, this is what I wanted to talk about. Two things. I want you to talk about gold. You remember, every time I get the call, remember we've got so many wonderful callers. Ari often calls and he talks about silver. And I said, Ari, it was just a couple of days ago. My GLD looks like it's making the pattern called the dreaded H. What is the dreaded H? That's the pattern that I'll be spending a lot of time on. This is chapter 17 in my CD introducing the ChapmanWave methodology. It is the pattern that leads to a test of the left side low. And if it keeps testing, it can keep breaking down. And what I'd said was that it seemed to me, you remember I was talking about HOG monthly chart with Mike just a moment ago? There's that pattern. See the weekly chart? It's making that H pattern. Just looks like a lowercase h. There's nothing, chart patterns repeat over and over. In fact, sometimes they're gnomons. That's what it is. That is a pattern that it extends on itself. It's still the same pattern. And that's exactly what happens here. Look, the dreaded H. There's a little one, and now here's a bigger one. But it's still that big H pattern, the lowercase h. So it says to me that 162.74 would be the target for the GLD. If it takes that out, it's going to test 162.30, the low of the 2nd of November. If it takes that out, you've got that whole area of support down to the 159.56 area. You remember someone was talking to me recently and said, no, I said, I'm negative on gold. I personally, I haven't got it for subscribers. I just didn't even know where to put the entry point was the DZZ. But I'm sorry now that I didn't recommend to subscribers to get the DZZ. The only reason why I didn't was once we missed a really good entry point on it, I just wasn't sure for the safety factor because it's such a low price. What is it trading at? $4 and something. So it makes the percentage loss if you're wrong too big. And I just didn't feel like I wanted to do that. But the monthly chart still says in the GLD that there was a peak F top. We're still in a sideways consolidation, but we're going for the second H pattern. And that H pattern goes to an M. And let me just explain what that is. That pattern says that there's a good chance that at some point the price is going to come down and retest the left side low bar, and that would be 148.27. Do I know? No, I don't know for sure. But the pattern says with the stochastic so bad and the MACD very, very weak, with the fast-moving average still way below the slow-moving average, the yellow against the red, that says that you've got to be careful here with gold. And the gold stocks are certainly taking a beating. I do not see much in the way of gold doing anything until I get a test of the 162.30 level. If it's a strong bounce above that, there's another pattern that becomes very bullish. That's a successful test without breaking. If it doesn't even touch 162.30, but in fact starts to rally, that'll be very positive. So I'm watching this so closely. It's very important. Now, I wanted to do that on gold. The other was high-grade copper, HGH, I think we're going to now. HGH, I don't know if I updated. Yes, leg D up. But the MACD is at 95% and the stochastics, so I keep saying that, the MACD is still very strong and the stochastics very good at 95%. So that's saying to me that copper is saying, hey, there could be something going on. Forget about all those politicians in Washington. We could be looking at copper telling us that, in fact, a little bit of a recovery is, in fact, happening. Maybe FXI, the China 25, is telling us there it's in peak C in the weekly, but maybe it's saying, hey, things are improving a little bit over in China. And that's very important to us. So I just needed to go through those different things. Now, let me do this because we're going to, because I have my course coming up Thursday and Friday. Of course, I won't be here. I needed to go through a couple of things. Why did I look at AZO as a short, even though It's trading now at 363. Am I upset? Am I upset? Ooh, 363. We were short at 380. Well, we got a 2-point profit. Took a 2-point loss, a 2.10 loss, I think it was 2 days ago. I keep it real tight. What is it? It's not even a 1%. We took not even a 1% gain and not even a 1% loss the other day, 2.10. Okay. But we've traded this before and we've done nicely. But this was the move that I was waiting for. Why? Because there's this pattern that I talk about, which is the cup formation. Let me just get rid of that. The cup formation. And that cup formation says that if the stochastic and MACD, look how poor they are compared to where it was at 399, 399.10, that hit twice for 2 weeks in a row, the week of the 20th and the week of the 27th of April. Well, that doji candle there at a potential peak E, left over from that peak D, said that if the stochastic is right, and this thing goes back under 80%, then we will be looking at the monthly chart, and the monthly chart says that the peak E can very quickly get a down arrow. I should technically do that right now, but I need a decisive close below the 9-period exponential moving average. So I really have to wait the entire month. Does that make any difference to any trades? No, that's just a technical sign that I have to wait for. So that says if the auto parts are starting to pull back, remember I said auto parts and retail are going to be very important on the watch list. So one by one, we're starting to see a fall off in some very key sectors. So I'll put that into some kind of framework as soon as we get back. And meantime, I'll just answer a couple of questions in the den while we're at break. Be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Just in the little brief period that we have in this particular segment here before we have Victor Jones. Oh, Victor Jones Options Hour, just a fabulous show. I really recommend you listen to it. If you're involved in options in any way, unlike me, I just deal with the naked options, either buy a call or buy a put. He has these other ways of looking at it, which are just absolutely tremendous. I had a question in the den about Amarin Core. Yes, it's done beautifully. It's made a beautiful left side, right side cup formation. If you're looking at the charts right here, this is the chart. And 1296 has been the goal. I'd hold this. I know you're in it. You're long. Hold it. It's doing very well. It might pull back to 1265, 1240 in the shorter term, but the weekly is improving. And the moment this thing can take out $12.80 to $13.10, that's very good in the monthly. So I like it. I think you picked a real good one, and I know that you traded it extremely well. You've done your homework. Congratulations. Hold it. Let's go to Nick in Oklahoma City. Hi, Nick. How are you doing?
Hello again, Basil. Thank you for taking my call.
My pleasure.
Question about Transocean.
Yes. Rig.
Have any potential to rise? It's warmer.
Okay, this is RIG, right? Rig?
RIG.
Yes. All right. Well, I like the pattern right now. This is fascinating that these oil service companies actually, I used to have these all notated. I'm not going to say that again. I have them notated. I like what's going on in Rig, but it's in I don't have to tell you. Do you have a position in it?
Yes, I do.
Okay. Is a position profitable? Is it profitable?
Yes. Yes.
Okay. If it's profitable, it gives a dividend, and I see it in a trading range. I see it in a trading range with a chance at 46.72 RIG trading at 46.74, up 66 cents. B, I can see it. This is leg C, and I can see it going to D, which is at 47.64. What I would do is I treat it as a combination of a dividend stock and a stock that's made a sideways consolidation, trying to get to the upper level. The chances are, but if it can get to 47.64, between 47.20 and 48.50, it's going to kind of hang out there. It's not going to maybe even break it, but it'll be giving you capital appreciation as well as a dividend. Then what I would recommend to you is if you see it start to slide and it comes back to the 46.75 to 46.35 after being hopefully up at the 47.80 level, that's when I'd be a little bit careful and I'd say, okay, now I've got to watch it very carefully and we need to do a new analysis. But in the meantime, the monthly chart is terrible. The weekly chart is really starting to improve, but within a consolidation pattern. The daily is the one that's very important. I would get concerned if in the next few days it closed under 45.74 to 45.50. If it does that, call me, because we're going to have to talk about it, because that's that arch pattern that says, be careful, and once it tests the low of the candle of the 28th, and maybe even go a little bit lower. Might even want to test the 43.65 level. I don't think so. I think right now it's in a nice uptrend, but within a contained rectangle formation in the weekly charts. I think you've got a good position. You got your dividend. I don't know when the next dividend payment is, but I do think that you've got the right stock just for this particular moment that we're in right now. So congratulations.
Thank you very much. You're the best. Thank you.
Thank you, Nick. I appreciate it. Nick from Oklahoma City. Now, folks, we're about to go to my final break before the day, at least my show is finished, and then you're going to go to Victor Jones and all the other the wonderful guests here. I'm going to remind you, I'm doing a webinar Thursday and Friday. This is a very important period for it. I'm going to be very constructive. Every question you have, I'm going to answer right away. I don't wait to answer questions because I know from my own, I forget the question. Even if I write it down, I forget to look at it. I stop right then and I get it. And you'll be surprised. The question you ask is the question others want you to ask as well. So please check it out. You get these incredible bonuses. I love teaching. I love to be with you. Go to the front page, check it out, and you will get a tax deduction. Hey, thanks for being here. I'll be back tomorrow. Have a wonderful day.